rough week for the banking industry.
The collapse of Silicon Valley Bank.
The second biggest bank collapse in U.S. history.
The last 24 hours, many founders, investors that I've talked to have been desperately trying to get their money out.
Our banking system is in a fundamentally different place than it was a decade ago.
And the economists are now asking the Fed to hit pause on further rate increases.
Hi everybody, welcome to the Business Time. From the thumbnail, you must have noticed that today we are going to talk about Silicon Valley Bank. So what exactly happened with the Silicon Valley Bank and how this will impact the Indian economy is more important to know. On 10th of March 2023, the Silicon Valley Bank, one of the 16th largest bank of the US, got closed. So what is the reason behind it? Is it the starting of a banking crisis? Is it again a 2008 crisis? So we'll take out everything on this.
All customers who had deposits in these banks can rest assured, they'll be protected and they'll have access to their money as of today. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Third, investors in the banks will not be protected.
Silicon Valley Bank come under top reputed banks in America and provide funding to many fintech startups and many capitalists park their money over there. During pandemic, US Federal Bank Reserve charged other banks an interest rate of just 0.08%, which was very low. The banks were very happy and were throwing money in the loans for the homemakers, for the other business partners, and for the startups. Silicon Valley Bank make heavily investment in the mortgage loan security with a maturity of 10 plus years, with average yield of 1.5%. Things were going right, but until pandemic hits, it went down and the companies were not able to pay their loans and interest rates. Secondly, the Russia-Ukraine wars, which was unexpected, created a huge energy crisis in the world and which led to the inflation in the economy, in the US economy, in which Federal Reserve increased the rate of interest, which made loan expensive for each and everyone, for the banks, for the homemakers, for the companies. Everyone was pressurized and the banks were pressurized to make and liquidate their assets. Also, cherry on the top was the bank strategy. The Silicon Valley Bank, to gain more customer and to gain more power in the economy, provided more of interest rate to its depositors. It promised the depositor an interest rate of 2.33%, which was higher than the average what other banks were provided. And due to this, lot of financial startups, lot of venture capitalists were started parking their money in the. When all such things occurred, it created a panic in the depositors, and US Federal Reserve also provided a better option for investment and the returns, and this created a blow in the market and depositors ran to withdraw their money. When all such things was occurring, the sudden blow and the no liquidity made banks to sell its asset at a very high losses to pay its depositors, marking it led to the crisis and the bank got shut down. We should know about the two theories that were concerned here. First is too big to fail theory. This bank was so large and so interconnected that their failure would lead to catastrophic consequences to the entire financial system. As a result, policymakers would be likely to provide support to these banks to prevent their collapse. For example, Silicon Valley Bank has invested in so many companies that their share prices would have gone down, their customers would be impacted, the huge economy and the other parts such as Indian economy, which is our concern, would be deeply impacted. Second is the banking panic theory. This theory suggests the bank failure can trigger the banking panics in depositors to rush to withdraw their funds from the banks, leading to a broader crisis of confidence and in the banking system. Now, important thing to know is what will be its impact on the Indian startup system and the Indian confidence. Indian startup system has been mostly criticized for its risky ventures and the kind of struggle they go through during the Indian economy. Many Indian startups has also deposited their money in their banks, which is highly impacted. As a domino impact, these companies will fall short of funds, and to cut the cost, they will cut the employee strength, and many of the people will get unemployed. This will create an overall panic in the market, and the cost of the products will increase. And investors will start withdrawing their money from these firms, making Indian market also fall. This will again impact all the sectors in the economy because it's a chain, a domino impact will go on, and this will overall impact the Indian economy. Now, the question arises, the falling of the Silicon Valley Bank has started the financial crisis again, like in 2008. So what do you think? Is it again a financial crisis that is happening, or the Indian economy will face more severe impact on this? Share your comments below in the video. Thank you. See you.